Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning, as usual, on August 30th, as with hopefully everybody else. Our offices will be closed on Monday for Labor Day. Hope you have a great long weekend, and we'll be back at it again on Tuesday. So the market, the sellers, I should say, finally stepped up a little bit this week. We've seen some slippage in the NASDAQ and some of the major indexes. It's pretty minor. I mean, coming into today, it was like maybe 1 to 2%, and today the market's generally up, so a little bit less than that. Overall, I would just say it's kind of textbook constructive action, okay? And I remain encouraged. We've even seen sort of for the market as a whole, I would say the intermediate term trend has turned up. There's a couple flies in the ointment. I've mentioned defensive stocks, which we'll look at again. They continue to, I don't want to say they're leading, but they're certainly fairly strong, okay? And growth indexes and measures are weaker than the rest. We're seeing some of these older, when I say old, I mean well-played, chip names and stuff like that, kind of get hit and affect the NASDAQ and some of these other growth measures that we take a look at. I think just stepping back, my overall view, and I've written about this, I talked about it on a call this week, is, the rally off the low in August, combined with the fact that a lot of stocks didn't do anything for 4, 5, 6 months before that. Remember, June and July was a very, very narrow rally. It almost looks like that August wipeout was sort of the final shakeout for a lot of these names that have since just kind of kited higher, either to new highs or close to it. And even on this little retrenchment in recent days have been pretty tight. It's not like they're really getting sloppy. There's been some exceptions, but for the most part. So I am optimistic sort of the next big move is up and that there could be a lot of leadership, especially on the growth side, to sink our teeth into. The timing of that move is still, I don't want to say it's a 50-50 coin flip, but it's still, I still think there's a decent chance we could back and fill. We could get, just some normal profit taking. We could have some, some fear level, something come on the horizon that increases the fear level and pulls the market down a little bit in September, and then we'll kind of go from there. If we do really break out, and there's a lot of breakouts, I mean, I'm ready to, I don't want to say floor the accelerator, but there's a lot of things to sink our teeth into. But for the moment, I continue, at least for aggressive growth stocks. I mean, if you're an index trader, maybe it's different. But for aggressive growth stocks, we're kind of stepping into things and trying to be pulled into the market. A couple weeks ago in Cabot Growth Investors model portfolio, we were 60% cash. Now we're about 1/3, call it, give or take. I'd love for that to be 5% instead of 30%. But again, we'll just kind of see how it goes. If we do if this ends up just being a nice calm consolidation, and for whatever reason we really break out, not just for a day, but stocks really show some big volume on the upside, clear breakouts, not a lot of selling on strength, I'll definitely be doing some more buying. But at this point, I kind of want to wait to see that happen, as opposed to buying in anticipation of things, and the market sags for another 2, 3, 4 weeks, okay? All right, let's hop into the charts and show you what I'm talking about. As always, I'm using a product called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. So let's just run through the indexes. So again, with the NASDAQ, I'm not even going to draw any lines, but you can just see we came down here. I guess I will draw lines. Came all the way back up here. And so far, it's a little sloppy in here. There's a little selling on strength, but that's if you're kind of watching the, intraday chart or whatever. Just overall, it's a very calm, controlled pullback to this point. I would say that, you could argue the way we look at it, we want to see this 25-day simple moving average turn up to depict an intermediate term uptrend. So you could argue it. I would say that this is kind of the days we're dropping off. So to me, it's still kind of neutral for the NASDAQ, and we'll see how this plays out. If we kind of come in here, there's really a couple scenarios. We come in here a little bit more, and then we really just take off, and that's joined with a lot of breadth, a lot of big volume, a lot of stocks hitting new highs, a lot of breakouts among individual names. I mean, I think that would be a very obviously bullish sign. I mean, the other sign, though, that I know not a lot of people are talking about, but you have a lot of chip stocks that are up 500% in the last 15 months or whatever, and some of those things, pull in, software pulls in further, and we just kind of get maybe not a full retest, but we get some sort of sluggishness here. Something happens on the world stage in September, whether it's election fears or geopolitics or whatever, maybe a bunch of strong economic reports make people rethink the Fed. And the market could pull back further, okay? That's really just, I still think that second possibility is a possibility. But for now, just going with what I see, I would say the market's doing everything that it should do in a constructive way. I wouldn't say it's 100% conclusive that it doesn't need more time to base out, okay? The rest of the indexes actually look better. So, I mean, the S&P 500 is right near its high. I mean, that's positive. The New York Composite is the strongest thing out there. This thing roared back to new highs, which is a little surprising because they're, like energy stocks have been weak and stuff, but I think a lot of financials, things like that, act well. And there's even just perusing like the broad market. This is the IWM. Is this like the biggest intermediate term uptrend? Is it like bottom left to top right sort of thing? No, but it's above all its moving averages. It's a little bit off its high. Okay, MDY here, same sort of thing with just near its highs at this point. So to me, the overall intermediate term trend is up. When you look at stuff like some of the growth indexes, it's kind of more like the NASDAQ. This is the IBD 50 index. It's not a magic index or anything. But you can just see it's still below the 50-day for one, but it's just kind of not quite there. This isn't the be-all, end-all, like I said, but you'd like to see it at least trending higher, right? The QQQE, which is the equal weight NASDAQ 100, does look better, and you can kind of see the 25-day line turning up. But it is also just kind of, this 90 level has been sort of a consistent barrier here, really going back to March, okay? By the way, though, I do like this QQQE. I was thinking about this. This does look like a lot of stocks that I follow, where it had a correction in the spring. It did come back and actually made some new highs here, but there was a lot of stocks that did this or did this. They didn't quite make it. It wasn't like straight up advance, even though the NASDAQ and the big cap indexes were. Then, of course, they got wiped out, and now they've snapped straight back. So this does sort of seem to mimic, at least at this point, a lot of the stocks I'm looking at. So I am kind of keying off it a little bit more, okay? And then, the other thing, too, is just this is secondary. I don't want to make too much of this because if the stocks break out next, say a bunch of stocks break out next week and XLP is strong, I'm buying. I'm still bullish. But I will say XLP and XLV, there's clearly some money going into the more defensive names. Some of it could be dividends, lower rates, Fed's going to ease. Some of it could be a weaker dollar, helps you. You can always sort of excuse it away. But just XLV, XLU, XLP have been strong. And again, I won't say they're leading the rally, but they're certainly, they're hitting all-time highs here ahead of a lot of other stuff, which is just not ideal. Same thing kind of with the Dow. This is just the Dow fund. The Dow is hitting new highs ahead of the NASDAQ. Kind of like to see the reverse of that. So there's just some, I would just call them imperfections. I wouldn't say they're like red flags or anything, just something to watch. The other stuff is just, I mentioned some of the old, I'm calling them old, but I mean chip stocks, I've showed this before. This is the SMH. Okay, and to me, the original breakout was back here. This was in the spring of 2023, so 15, 16 months ago, whatever that is now. So call it at 130. I don't have the exact level, but 135. And it got up to whatever this was, 280. Okay, so it more than doubled as an index. Obviously had a great run. Obviously, NVIDIA and a lot of these stocks have had big moves. So it's not early on this. And of course, just going by what you see today, it's relatively weaker than a lot of other indexes and areas of the market, which kind of makes sense. And so I still think, it's not about thinking, but here's like ARM, even NVIDIA. Now it got hit on earnings yesterday, but it's not terrible. It's just sort of still in this sort of base building mode. Okay, long term, I would guess NVIDIA hasn't hit a total peak yet. This whole structure to me does not look abnormal at all. But in the meantime, in the short term, you might have some more work to do. And you have some other AI stuff, like this was Pure Storage, which we owned for a time. It got nailed on earnings. Even NTAP, which is NTAP. These are just names, storage in the AI space that have been sort of, I don't want to say they've been played out, but they're well known. It's kind of like the AI infrastructure theme. And if that is still digesting, it could have some after effects on the NASDAQ and sort of lead to some selling on strength. So my main point here is twofold. Number one, these things could affect the market. But number two, when you're hunting for stuff, I would, again, hunt for stuff that's a little bit fresher, okay? I still think getting into individual stocks will look good now. I still think there's a lot of software names that look good. This is ServiceNow. Now, this is not unknown. But again, this is sort of one of these names that, it hit a new high here on earnings in July, but it really didn't do anything. It hasn't done much really since February, okay? And this is a big liquid, great numbers, well-sponsored. This isn't like some small cap name. There's just a lot of stocks like this. But now here it is just perched near its high. Does it need more time? Will it break out here? It's not like there's been overwhelming buying or anything, but it looks pretty good overall. Some of the smaller names, especially things that have kind of come through the ringer. This is Doximity. It was in top 10, DOCS. You can just see it's been killed. It's kind of cloud software for medical professionals, okay? But it started to change character in here, very tight, and then you've had this huge, earnings move, and just, I don't have a name for this yet, but it's kind of a big earnings move, and it's just kind of crawling higher, and I view this as a good thing, meaning it's just it's sort of tight but leaning higher. I got to come up with a name for it, but to me that's constructive action, okay? Monday.com, Israeli software, MNDY. It's been very up and down and sort of on this net basis, which is one way I look at things. It didn't really go anywhere from last June, call it, to a couple of weeks ago. But maybe earnings here is a game changer. And again, you're starting to get, one thing I'm looking for is you could look for breakouts, but some of these pullbacks and tightness in here if you resume higher. So far it gapped up, new highs, new RP peaks, which is this blue line relative to the S&P 500. And now it's been flopping around, don't get me wrong, but just low volume here, no real selling, pretty tight in here. And maybe it goes up, maybe it fails, but I'm just saying if it can kind of confirm on the upside, that would be a good sign for the stock and probably for the sector. And then this is kind of interesting. This is Flutter Entertainment, which is basically FanDuel, which is it's actually bigger overseas than it is in the US. So it's a little bit of a clunky story. I think there was I forget if it was a SPAC or I forget how it came about. But this is basically FanDuel like DraftKings. And it's kind of had this, again, topped out in whatever that was, January probably. And it's kind of had this 3 waves down, which is something you see in the market here and there. It has become pretty liquid, I think. It's a $200 stock trading over 1 million shares a day, so that sounds pretty good. And you just had this, gap up on earnings, and again, just kind of very tight in here. There is old overhead, but just overall, that's constructive action, okay? So software is one. Now, I mentioned AI infrastructure being kind of weak, and now I'm going to talk out of the other side of my mouth and say some of the networking stuff still looks good. So this is Arista, which again, it's not... you're not in the first inning of the move. That said, I've mentioned this before, how it's been up. It was up 4 weeks in a row, down this week, but zero volume here. And, it's not, could it fail like next week and look bad? Yes, but it's one of these things with 2 or 3 good days or a good week, call it. It could be breaking out to new highs on big volume and look like it's ready for a new advance. So it's just a name I'm watching. Another name, CRDO. This one's on my watch list. This is, again, fresher, a little bit further down the food chain, less well sponsored and whatnot. But big breakout here. It got yanked down by the market, but found support here. And then just classic tennis ball action. And so far, on a daily basis, it can move a few percent a day. But CRDO, it's certainly holding up well. They do have earnings next week on September 4th. Okay, so Wednesday, I think that is. So we'll see how it goes. Maybe it gets hit, maybe not. But either way, this sort of action, it being fresher, it has huge estimates. Big quarter already underneath its belt there. So I am fairly high on that if it can get through things. Again, with the pullbacks here, so this is like CBRE. This is not going to be your fastest horse, but this is a big long-term breakout. This is a huge real estate management operation. Obviously, lower rates help, looser money helps. You can see a big long-term breakout on the weekly chart, and on the daily chart, kind of hits new highs, pulls back. Again, no real volume of late. And now you're getting some of the moving averages to catch up. Not that it's the most volatile stock anyway, but I still think that looks good. Rocket Companies, which is really Rocket Mortgage, is the main thought here. Again, kind of an interest rate play. If you get the interest rate plays, you take what comes with it. If we have 5 straight super strong economic reports next week or next month and interest rate expectations change, these stocks are going to get hit. That's just the nature of them. But I would just say overall, it's been consolidating, had a nice big volume breakout, and this looks kind of like the first pullback. Okay, so maybe it shakes out more, maybe it doesn't, but overall constructive action and probably getting toward a better risk reward situation. 2 that are in a similar group, these are kind of low level names. This is DoorDash. Big correction here. I think it was, I'll tell you right now, 31% deep, so not that, not horrible. It had a big move off the bottom here, obviously, as you can see, big correction. And then you had these 2 big weeks off the lows with the help of earnings. And part of it was, first it was earnings, and the day after, so that was Friday. The day after this wild day, that was the crash day, so to speak. I don't know how crash, but the mini crash day. And then it actually closed up there. And you can just see it's acting. Again, it's kind of one of these, is it, a buying panic? No, but it's just sort of in there. It's very tight. And especially if the market gets hit next week, like the NASDAQ's down 2% one day, but these stocks don't go down much, or they come down and come right back up, that would be very, very, positive sign. So far, I would just say it's acting just as you want it to, and maybe a breakout higher. Uber's similar, where it had this big decline, rally, and then a huge shakeout and an immediate snapback thanks to earnings. And again, the last 2 weeks in here, just a very tight, 71 to 75 sort of range. Can the stock really get going with the volume? There is old overhead on these, so it's a little bit different, but still, okay. And then a couple more. TGTX, Uber, by the way, is Uber. UBER is the symbol. TG Therapeutics, so this is TGTX. Again, you're getting these sort of breakouts and then pullbacks or tightness. This one's more of a hot potato. You can just see on the weekly chart, it's much more up and down. But it does look good. It just broke out, here we go. It broke out on nice volume on some good, I think it was trial news. Okay, first earnings, then trial, and now it's pulled back here, very low volume. Biotechs, they can move around or whatever, but so far looks very proper. Okay, NTRA, which we've mentioned 100 times, but NTRA, again, you kind of have this shakeout below the line. This one has had a run, so it's not in the first inning, but it shakeout below the line, big rush higher, and now you're getting this sort of pretty minor pullback in here. I don't know what this volume was about. It's a little bit weird, but pretty modest pullback, low volume into sort of support area, blah, blah, blah. So, that one looks like, can it resume? Will it break down? Maybe. Can it resume higher? I think that's what I'd be looking for. And then Comfort Systems, which actually sounds like it's an HVAC company, but a big part of their business now, sales are growing 40% last quarter, is, technology and data centers and stuff like that. But you kind of have this classic big acceleration higher and then just straight sideways with a shakeout near the end. And it's pretty classic, to be honest with you. Not a lot of volume on the upside yet. And it's trying to break out sort of on this lowish volume area. But overall, FIX, this is Comfort Systems Fix, FIX, looking to break out to new highs. So overall, like I said, I can't really summarize it more than I did earlier. I think the action to this point in the market and in leading stocks has been very constructive, and they've pretty much, unless you just wanted to see day after day of 1% gains on huge volume, which we all do, but that's not realistic. They're pretty much acting as well as you'd want to, and given that they were going to pull back at some point, this pullback so far looks pretty normal. The question is, how does the pullback play out? And, if it plays out like this, the odds are not 100%, but the odds are much higher that we are going to go higher and the market's going to have an intermediate term run at the very least. Okay, and a lot of these stocks are too. If the pullback plays out where, it tries to gap up, sells on strength, tries to gap up, sells on strength, some bad news, that sort of thing, then I think it doesn't mean I think we're going down here necessarily. It just means that, we'll see how the stocks act, but, assuming the stocks can kind of hold up decently, that the market might just need more time before it's ready to get going with some of the uncertainties ahead. Okay, right now we are putting money to work, but we're doing so kind of deliberately, kind of step by step. And from here, we'd really like to see the market pull us into a heavily invested position by the indexes like the NASDAQ and leading stocks breaking out on the upside. Okay, that's all the time I have for today. Have a great Labor Day weekend, and we'll be back again next week for another Cabot Weekly Review.